Morning, everybody. It's Thursday, August 5th. Just taking a look at the S&P 500 futures. Yesterday was a choppy day. I had a red day yesterday, and in hindsight, it makes a lot of sense. I started the day fine, and then I sort of lost sync with the markets as the day developed. But when we're looking at it, we've been talking about this big, larger sort of rotation period that we've been in, this sideways period. You can see it very clearly here with this teal bracket. And this darker red, this thicker red dotted line is the main point of control for that whole balancing area. And yesterday we were really just hugging it. And we were sort of between that point of control, and then there was this other, not larger, this other high volume node here as well, right? Which has become now the point of control, interestingly, after yesterday. So it shifted, right? And that's basically what happened. What we had was two high volume nodes, well, three really. We had this one, which was the main one. Now that's moved up to here. All right, I'm gonna just switch these. All right, bring that one down. And then this is now our main POC. And so it was, price bouncing back and forth between those two levels. And that's what created all of our just choppiness yesterday, right? Where the market was struggling to find direction and was probing those levels. And we even probed down to this one, this lower POC or this lower high volume node as well, right? We probed that a little bit. So all of that interplay creates a choppy market. Plus, we're inside of ranges, right? Where everything's been inside of, this down to here and then this up to here. So really, like, this is, one swing, and then we're just retracing inside of that swing. And I thought there was a chance we'd come down and retrace to this level maybe, but we didn't. We hugged what was the previous main POC. And when that happens, then we start to see the POC shift upward. And then you can see like we're starting to even now hold above it here. That gives me a little bit of a bias towards a bullish breakout from this balancing period. You can get rid of some of these old supply and demand zones. You can see how price reacted to those. We've still got this level up here. Now, this is a real kind of funky one because you've also got high volume down here. I'm going to move that because I think I like it better down there. We might come up and touch this, but we might just touch here and then reject back down again. So there's also like, this is where the volume starts. And so we can see we're actually already reacting to the bottom of this level here. See that? So this is where the volume starts right there. And you can see how we're now pinched between that volume and then the main POC. So it's basically, it's different time frame players, right? We've got this smaller auction and small time frame players responding to those areas of rotation. And then we've got also players who are interacting with this larger balancing period, okay? This larger balancing area. And so that makes a challenging market to trade because you've got different time frame players competing, within the same sort of structure. And that makes the market very difficult to find direction. You could see like yesterday was just choppy, choppy, choppy. There were some good trades in here, and then but they were hard to find, right? It was hard to know which ones were the good ones and which ones were not. There was a couple that I didn't take that ended up being winners that probably would have, like I took one in my paper account. I had another one that I just sort of monitored on the chart. If I would have taken those, I could have probably pushed me at least break even or green for the day. But at that point, I was feeling so out of sync that I just decided to step away from the charts and not dig myself into a deep hole. So I had a down day, but it was a controlled down day, right? Which is what we want. We want controlled down periods. And so I'm going to watch things carefully today and just take my time because this is all choppy and sloppy. If we look at our session volume, you can see we're very much just within yesterday's range, kind of just on the top side of yesterday's value, building a lot of volume up there. We've been kind of rotating around, the points of control are almost identical. So yesterday was very much a balancing day. I don't know if today will be as well. If we break out above this level, then that may be something that, if we kind of stay above yesterday's value area high, that may be something that we want to maintain an awareness of. So we'll call it yesterday's value area high, so we kind of know that. Because then we might start pushing into a bullish day. But again, we've got some of this volume up here to contend with, so I'm going to be pretty cautious to the upside. Um, this may be a day to sit on your hands, at least in the equity markets. We'll just see how the market unfolds. If we get a strong trend, it's one thing, but yesterday was super hard to trade. The way to trade yesterday would have been to trade like a range day, and I've been playing with some sort of range day trading concepts because the market does spend, the bulk of its time ranging. And so if we look at yesterday's open session, you can see this was, basically from the open 9:30, we tested lower levels, we tested upper levels, we just kind of bounced around all over the place. I've been working on a script to help identify good quality divergent bars, and this is what the script looks like. And basically the way I play these bars is a stop entry over the top of them, stop loss beneath the low, and then I usually just go for one-to-one risk on these. And if the low gets taken out before the entry gets triggered, just cancel the order. Or if it's a few bars go by and you don't get triggered in, cancel the order. And you can trail the stop because you can see a lot of these, when they do work, they work really well. Like this one, I probably would have canceled it just because it didn't trigger right away, but you can see it would have worked out. This one probably would not have worked out, but this isn't actually, you can see I don't actually, it's technically a divergent bar, but I don't have a signal over it because it doesn't meet my criteria. This one wouldn't have gotten filled because the low got taken, or the high got taken out before, but the bar immediately following was another divergent bar that met our criteria, and you could have put a stop loss under the low and taken that right down. This one's beautiful, stop loss over the high, taking it right back up. So when you get these choppy range days, playing these divergent bars off the extremes can be pretty good. This one would have failed. You would have gotten triggered in and then stopped out. I believe this went up before it came down. If it came down first, which I don't believe happened, you would have canceled the order. This one looks like it probably would have not gotten filled. I think you would have gotten taken out. The low would have gotten taken out beforehand. And then these ones wouldn't have gotten filled there. This one I actually tried to take and I got stopped on it. And then this wouldn't have gotten, this one you would have canceled. This one would have worked. This high held, and it probably could have gone for a one-to-one there. This one as well would have worked if you would have put it there. This would have gone down, and then right at the end of the day here, this one would have worked beautifully. So these can work out really well. You can also target, I just do one-to-one targets on these, but you can target like a 20 moving average is another like decent way to go about it. So if we put a 20 moving average on here, you can do that as a target too, because you can see it usually does, hit that 20 moving average. And that gives you a nice, easy target. But you got to make sure you've got enough room then to get your risk reward. You know what I mean? If there's not enough room to get the risk reward, maybe you don't take the trade. Some of these that didn't work, that's probably a good indication of maybe why. It's just there's not enough room to the 20 MA. You really want it to be away from sort of average price if you're going to take that trade. So the ones that are close to the 20 MA didn't really work out. Like even this one, it probably worked, but it's pretty borderline. This one ended up working, but you can see it almost would have gotten, the high would have almost gotten taken out before it got filled. This one's beautiful. This one's beautiful. So these ones that are real far away from the 20 MA work real well. This one really close, like borderline, would have worked. But this is a downtrend. This is not, like, I probably wouldn't have taken this one because we're in this steady downtrend here. This is choppy, sloppy markets. And in these sideways choppy markets, this is where this strategy really is strong, So that's what I've been playing with. And it's a nice little strategy for when the market's choppy. But you got to be consistent. They're not going to all win. So you got to just take the shots. And again, like if it doesn't look like there's a lot of room to get a good risk reward, then you don't take it. So you got to use some amount of judgment. So I'll probably release that script publicly maybe next week or something. I want to just keep testing it a little bit, make sure I can do a good strategy video to make sure people know how to use it effectively. So yeah, that's kind of that. And otherwise, let's just, for today, like today is tricky. I don't really know what I'm going to do today, to be honest with you. When we just look at this whole big thing, you know, to the upside, again, I'm still watching this area around 44.11, but I don't love this consolidation because we have two, like it's just a little tricky. We're already reacting to the high volume down here. Like if we zoom in on the consolidation, right? We're already reacting to the high volume here, and we've got this volume here, this volume here. Our stop would have to go above the highs up here, really. And there's so much other stuff going on also down here that I just don't know how much downside, if we start to break out up here, I just don't know how much downside room we've got because there's so much congestion here. So I don't really love a trade off those levels. If anything, I'd probably wait for a break above, and then I would try to go for a retest from the top and go long or something like that, right? Again, some of these bigger levels, these are all these many little high volume nodes we have from this larger auction. And that's what makes things tricky because we've got, these lower volume, these lower time frame areas of interest, but then we've got all these bigger nodes. Like this is a low volume node from this auction, right? You can see it here. It's filling in a little bit, but it's a low volume node from the auction. It also is a low time frame, high volume node from this consolidation, right? This is where the volume starts from this consolidation. So that's an interesting level for me. That's 43.8250. If we come down there, I do like that level. Again, the tricky thing is stop placement because I would want to put my stop probably under these lows here, right around like 43.73. But it's questionable whether that's going to hold or we got to put our stop underneath the whole thing, which becomes more of like an overnight type trade versus an intraday trade. So it's just a really tricky market right now. And I suggest, you know, you can always scale down. You can trade smaller size on days like this. Like I'm still holding on to gains for the week. So, maybe I trade smaller size today and that way I don't destroy my weekly P&L when it's such a dicey sort of precarious market right now, especially having not broken out of any of this consolidation. It just makes things a little bit funky, at least in my opinion, you know. And so looking at it again, if anything, this area here is where I'm interested because of this consolidation. But again, like it's not a super clear consolidation, Let's try and grab it a little bit more accurately and just see what we get. Yeah, I mean, so there's something like that, but again, we're already so close to it that I just don't think I'd play it. I'd look for that from the upside. And then you've got this stuff down here from the reversal. You can do a reversal type trade, but you can even just see on here, again, this is the level, and we really have to go down to a lower time frame to see what's going on within that level, right? So it's just not clean, right? It's not clean. This is an interesting level too, just because it was a consolidation area that really just got blown through. And this one might get a reaction from the top side if price were to come back, but actually it looks like that happened. Let's just put that on the chart and just see. I think here, let's just make it a different color so we can see clearly, because I think that might have gotten tested. Nope, that didn't test it. So that's another area that could be kind of interesting. I don't know that I would play it, but yeah, just you could see just how the number of lines on my chart is very indicative of just how tricky this current market is. Like usually I just have a few lines on the chart, but right now there's just so many areas that we need to be aware of because look at this mess, right? It's just craziness. This is this lower one there. Yeah, just a lot of messy stuff. What's this one? Let's see here. Hold on, let me go out. Sometimes I gotta remind myself what some of these levels are, So yeah, we have also, levels from some of these other auctions that I don't know that this is relevant anymore. I'm going to delete that one off. Just try and clean some of this up a little bit. I mean, it's just wackiness, right? Yeah, I don't know that I need all of those, but yeah, it's a messy, messy market, I think. And yeah, I'm gonna clean some of this up. Keep that there. Okay. So yeah, I guess that's the moral of the story, guys. It's messy right now. We're hovering around the point of control of this larger auction, and that is going to make it really tough because it's going to be short time frame players trying to push price away in either direction are going to be fighting against the magnetism of the that higher time frame balancing area, right? You can almost, it's almost like gravitational pull, right? Like, so when we look at like models of the universe and there's a large body like the sun, right? And they like rest it on like a fabric, like, space-time fabric, and it creates sort of an indent that draws everything towards it. And that's what keeps us in orbit around the sun, right? It's that large body just creates, um, an indent, for lack of a better term, right? And that's kind of what happens with these large time frame, high volume areas, right? They keep just drawing price. You can just see how this has just drawn price back to it. Even this lower one that was our point of control up until yesterday, I mean, you could see how it kept drawing price to it. And every time price came around it, it gets choppy. And then we go away and we're drawn back to it, and then away, drawn back to it, away, drawn back to it. You can see how it also acts as support and resistance throughout, once it was established really throughout here. For the rest of this balancing period, it's been support and resistance. So if we continue to hold above it, I'm looking for a bullish breakout. Ultimately, I'd like to see us break out of this balancing period. There'll be much easier trading at that point. So try to keep your account balance alive through these choppy periods, because once we break out of this, if we start a nice trending period, we can have several days or several weeks of just really nice, easy trading where the trends get followed and the support and resistance levels get nicely respected. So for now, though, bear in mind this larger balancing area and make sure that you are using caution going long into the top of this. Like, I'm not going long this morning right into this, because you can see, right, this area created the resistance for this top. This area created the resistance for this top, right? So the upper supply and demand areas are getting respected. The lower ones are getting pierced, right? But the bottom of the channel is being respected. So it's sort of an interesting dynamic. And if this pattern is going to continue, where this is respected, this is respected, this is respected, then we would almost expect another probe to the downside right now. And I was just reading an article this morning that talked about how normally throughout a given year there are, two or three times where the S&P drops by 5% or so, and we haven't had a 5% drop in the past year. And in fact, in recent history, the only time that we had another stretch of time without a 5% drop that was greater than right now was in 2017. So it's very rare to go this long without a big pullback. We had some decent pullbacks, when we look at the larger time frame charts. We had some decent pullbacks, but nothing, I guess, that was kind of, well, obviously we had this, right? But we haven't had a 5% pullback since basically 2020. So, analysts are sort of anticipating or waiting for something like that to happen. Got a lot of old drawings on here. So yeah, keep it close. Maybe scale down your position size, right? That wouldn't be a terrible idea. Scaling down position size and just keeping, again, like the main goal right now is to protect your account balance. And if you're not comfortable, just don't trade, right? Just like, or paper trade right now until we get out of this. I mean, look at the daily. This is really congested. We haven't had, like, this is kind of similar. This is kind of similar. But this is a really congested area. This is very difficult to trade. So if you're even breaking even in this kind of market, you're doing pretty good. right? I had a very slight down week last week. I'd like to maintain an up week this week to balance that out. Because again, even breaking even here is fine. Remember, most professional traders make the bulk of their income during very small periods throughout the year. So, you just kind of need to hold on tight through these challenging times, and so that your account is ready, and most importantly, that your emotions are ready. If you get yourself chopped up in this because you're trying to get aggressive in this kind of tricky market, and you get yourself all beaten up, then you might be too timid to take the really good, like A plus plus setups when they show themselves. So that's kind of my reminder for myself today, has been, save yourself for those A plus plus setups. And if they don't appear, just don't trade. Like, just sit on your hands, right? Yesterday, I should have sat on my hands a little bit more. I took some setups that were not A plus plus setups, or, trade different markets. There's other things to trade. You don't have to be stuck to these things, right? Like earlier this week, I was trading gold a little bit. There's been some decent movement in gold. Crude has been really moving. Look at this nice trend in crude on the 30-minute. So lots of good setups in here. If you want to have something that's moving a little bit more, some of the currencies, right? And these have micro contracts. All of these have micro contracts that you can trade, right? The currencies have been moving a little bit more. So I've in the past had very good fortune trading soybeans. Soybeans tends to move very rhythmically. And like some of these trends, again, this is a 30-minute, some of these trends could be scalped really nicely, right? So don't limit yourself, I guess, if the market's not behaving the way you want it to on equities. Here's Bitcoin futures now even. So yeah, there's plenty of opportunity out there, and sometimes that's where we need to look. So. All right, folks, I'm going to sign off. I'm going to do some morning meditation, get ready for the market to open. If you want to join us in our trade room, dpmtrades.com, we have a free area that you can join and trade along with us and learn a ton. And you just go to dpmtrades.com, click on community. You can join the Discord channel there, and have some fun trading. And again, the main thing right now is protect your account balance. We've had great luck, actually. I mean, throughout this period, we've done really well with our swing trades. I don't think I had a single losing swing trade throughout this period. I took this low, I took one off this low, I bought this low, and we just took profits on the rides up. So we've done great with our swing trades. It's just been a tricky day trading market. So, but again, you can join us in the room and you can follow along. So, all right, guys, I will catch up with you tomorrow.